D-Wave Quantum, the next big leap in tech, or just a hype bubble? March 31st conference breakdown. What if you could invest in a stock that's part of a revolution predicted to reshape industries as we know them? Imagine getting in early on a groundbreaking technology that could change how we solve problems, from drug discovery to traffic management. Quantum computing is here, and D-Wave Quantum, QBTS, is making waves, pun intended. With its Qubits 2025 conference set for March 31st, the stock market is buzzing. So, is this the opportunity of a lifetime, or just another hype cycle? Let's break it down. Hi, welcome to TheFinanceSavvy, where we explore the most exciting opportunities in the stock market and help you make smarter investment decisions. Today, we'll dive into D-Wave Quantum's QBTS upcoming Qubits 2025 conference, what it means for quantum computing, and how investors can position themselves ahead of this milestone event. If you're as excited as I am about the future of tech, don't forget to like, share, and subscribe to the channel for more updates and insights. Got questions? Drop them in the comments below, and let's start a conversation. Now, let's get into it. D-Wave Quantum, a glimpse into the future of computing. D-Wave Quantum isn't just any tech company. It's the first ever commercial seller of quantum computers. Think of it as the Apple of the quantum computing world, pioneering a technology that has the potential to solve problems classical computers can't even touch. From optimizing complex systems to powering AI innovation, D-Wave is at the forefront of the quantum revolution. And the buzz? It's real. In just 6 months, QBTS stock surged an incredible 583%, transforming from a penny stock into a serious contender. But as of this year, it's also faced a 31% correction, highlighting the inherent volatility of emerging markets like quantum computing. So, why is March 31st such a big deal? Let's break it down. Qubits 2025 conference, why it matters. From March 31st to April 1st, D-Wave will host the Qubits 2025 conference in Scottsdale, Arizona, under the theme Quantum Realized. This isn't just another corporate event. It's a showcase of D-Wave's most cutting-edge advancements in quantum computing, AI integration, and hardware development. Here's what to expect at the conference. 1. Game-changing innovations. Executives will reveal how quantum annealing, a technique pioneered by D-Wave, is solving real-world optimization problems. 2. AI plus quantum fusion. With AI demand skyrocketing, D-Wave is doubling down on integrating quantum computing into artificial intelligence workflows. Imagine AI systems that are not only smarter, but faster and more efficient, thanks to quantum power. 3. Customer success stories. Industry leaders and clients will share how they're already leveraging D-Wave's technology in areas like drug discovery and traffic optimization. 4. Expert perspectives. Thought leaders in quantum computing will discuss the future of the industry and its real-world applications. For investors, this is more than just a tech showcase. It's a sneak peek into the future of quantum computing and how D-Wave is positioning itself as a leader in the space. D-Wave's quantum advantage. What sets it apart? Founded in 2011, D-Wave broke barriers as the first company to commercialize quantum computers. Its flagship Advantage system boasts over 5,000 qubits, enabling it to tackle optimization problems that are impossible for traditional systems. But what's even more exciting is D-Wave's recent move into gate-based quantum computing, a technology that rivals systems developed by heavyweights like Alphabet, GOG. By diversifying its offerings, D-Wave is expanding its market reach while solidifying its reputation as a quantum pioneer. Add to that the success of its Leap quantum platform, which provides cloud services to both corporations and individual developers, and you got a business model that generates revenue through both hardware sales and cloud services. The numbers speak volumes. Let's talk about D-Wave's financial performance. In 2024, the company A. booked $23 million in revenue, a 120% year-over-year increase. B. raised a whopping $175 million through a stock sale. C. hit a record $178 million cash position by year-end. These figures underscore D-Wave's momentum but it's not without its challenges. The company's annual cash burn of $60 million highlights the high costs of innovation, and its share count nearly doubled in 2 years, diluting existing shareholders. Despite these hurdles, analysts remain optimistic about the stock's growth potential. QBTS stock, analysts take. Wall Street is bullish on D-Wave Quantum. Analysts have raised their price targets significantly, with Riley Securities doubling its target from $4.50 to $9. The average 12-month target for QBTS stock is $6.70, representing a 14% upside from current levels, with a street-high target of $9, indicating a potential 53% gain. Even skeptics of quantum computing's commercialization timeline acknowledge D-Wave's progress. When tech leaders like NVIDIA's Jensen Huang or Meta's Mark Zuckerberg say quantum computing is decades away, D-Wave is here to prove them wrong with practical, real-world applications today. And don't just take my word for it. Microsoft co-founder Bill Gates recently said there's the possibility that in the next 3 to 5 years, one of these techniques will achieve enough true logical qubits to solve some very tough problems. Translation: the quantum computing revolution might be closer than we think. Risks to keep in mind. Before you jump on the QBTS bandwagon, remember that quantum computing stocks are inherently volatile. Emerging markets are prone to wild swings as investor sentiment ebbs and flows. A single positive announcement can send shares soaring, while bad news can trigger steep declines. With a sales ratio of 106x, QBTS trades at a significant premium compared to the industry average of 3.3x. This reflects high investor expectations, but also raises the stakes for any missteps. If you're risk-averse, consider watching the stock from the sidelines until the price stabilizes. But if you're willing to take a chance, the March 31st Qubits 2025 conference could be a pivotal moment for D-Wave and for your portfolio. Conclusion: connecting to the bigger picture. The quantum computing race is heating up, and D-Wave Quantum is at the forefront, pushing boundaries and redefining what's possible. With its Qubits 2025 conference just around the corner, the stage is set for the company to showcase its innovations and reignite investor enthusiasm. But D-Wave isn't the only tech story to watch. Quantum computing might be the future, but AI is dominating the present. As we look ahead, ARM Holdings is struggling to maintain momentum despite surging demand for AI processors. Could this be an opportunity for other players like D-Wave to shine? Stay tuned for our next video, where we'll dive deeper into AI's impact on the tech sector. Thank you for watching today's video on D-Wave Quantum and the Qubits 2025 conference. If you found this helpful, don't forget to like, share, and subscribe to TheFinanceSavvy for more insights into the market's hottest trends. Got questions? Drop them in the comments below. We'd love to hear your thoughts. Until next time, keep investing wisely and stay ahead of the game. See you in a few seconds. ARM Holdings. The truth behind the drop. Hidden opportunity or a stock to avoid. Imagine this. A company at the heart of the AI revolution, with record-breaking revenue, strong demand in the data center market, and partnerships with global giants like NVIDIA, Amazon, and Microsoft. Yet its stock price slips. How does that even make sense? Is this a hidden opportunity to buy into ARM Holdings, ARM, or are there warning signs we can't ignore? Stick around, because today, we're diving deep into this story. Hi, everyone. Welcome to TheFinanceSavvy, your go-to channel for market insights, breaking down the hottest trends, and helping you make smarter investment decisions. In today's video, we're going to explore ARM Holdings' recent earnings, its role in powering AI demand, and whether this dip in its share price is an opportunity for investors. Is ARM the golden goose of the semiconductor world, or an overhyped stock struggling to keep pace? Let's find out. Before we dive in, don't forget to hit that like button, share this video, and subscribe to TheFinanceSavvy for more updates and insights. Got questions? Drop them in the comments below, and we'll tackle them together. Let's get started. ARM Holdings. At the center of the AI and semiconductor revolution. When it comes to semiconductors, ARM Holdings is a name you can't ignore. Its technology powers almost every modern smartphone in the world. But what's more exciting is its expanding footprint in data centers and artificial intelligence, AI, two markets that are exploding with potential. Despite posting record revenue in fiscal Q3 and smashing analyst expectations, ARM stock recently took a hit. On the surface, that might seem puzzling, but it's often the case with high-growth, high-valuation stocks. The question is, should we view this dip as an opportunity or a warning sign? The good news: record revenue and AI growth. Let's start with the highlights. A. ARM's fiscal Q3 revenue hit a record $983 million, up 19% year-over-year. B. Adjusted earnings per share, EPS, soared 26% to 39 cents, beating analyst expectations of 34 cents. C. Royalty revenue, which is a key driver of the business, jumped 23% to $580 million, thanks to strong adoption of ARM9 technology and increased use in data centers. Why is royalty revenue so important? Because it's essentially passive income. ARM gets paid every time a chip using its designs is shipped. And with the rise of AI workloads in data centers and edge devices, ARM's royalty rates for its newer technologies are double that of older models. In short, ARM isn't just growing. It's growing in high-margin, high-demand markets like AI, IoT, Internet of Things, and data centers. AI demand, ARM's crown jewel. ARM is becoming a major player in AI infrastructure, and here's why. 1. Compute subsystems, CSS. These systems are specifically designed to handle AI workloads, whether it's on edge devices like smartphones or in massive data centers. 2. Amazon's Graviton CPUs. Amazon is using ARM's technology for its cloud computing services, showing the company's strong foothold in the data center market. 3. Stargate project. ARM was recently announced as the CPU of choice for the $500 billion Stargate data center project, where NVIDIA GPUs and ARM-based CPUs will work together to power the future of AI. And it's not just about hardware. ARM has begun shifting to a subscription-based licensing model for its intellectual property, IP. That means more predictable revenue streams and long-term profitability. The challenge is, why did the stock slip? Now, let's address the elephant in the room. If everything is so great, why did ARM's stock price dip? A. High valuation. ARM's forward price-to-earnings PE ratio is over 80, which is extremely high compared to industry averages. Investors are paying a premium for its future growth, and any sign of slowing momentum can lead to a sell-off. B. RPO decline. ARM's remaining performance obligations, RPO, a key indicator of future revenue, fell 3% sequentially to $2.33 billion. While this isn't a huge drop, it signals a slight slowdown in future bookings. C. China dependency. About 25% of ARM's revenue in fiscal Q3 came from Chinese smartphone manufacturers like Oppo and Vivo. While these companies are gaining market share in China, geopolitical tensions and competition from Western brands could pose risks. Is ARM stock a buy after the dip? So what does that leave us? Let's break it down. Bullish case. ARM is making all the right moves. Its royalty-based business model is highly profitable, and its new technologies like ARM9 have higher royalty rates, driving long-term growth. With its expanding role in AI infrastructure, ARM is well-positioned to capitalize on the AI boom. Analysts believe ARM's V9 technology could eventually account for 67 to 70% of total royalties, up from its current 25%. Add to that its partnerships with giants like Amazon, NVIDIA, and Microsoft, and you've got a compelling growth story. Bearish case. At a forward PE of over 80, ARM's valuation leaves very little room for error. The stock's strong start to the year, plus 35% YTD, means a lot of optimism is already baked into the price. If growth slows even slightly, the stock could face more downside. Plus, while AI demand is skyrocketing, it's still a long-term play. In the short term, macroeconomic pressures and high interest rates could weigh on tech stocks like ARM. ARM versus D-Wave Quantum. Two paths to tech's future. Now, let's connect the dots between ARM Holdings and the story we covered earlier about D-Wave Quantum, QBTS. While ARM is focused on AI and semiconductor design, D-Wave is tackling the next frontier, quantum computing. Both companies are playing in transformative industries, but their strategies couldn't be more different. ARM relies on a decades-old royalty model that generates steady cash flow. D-Wave, on the other hand, is a high-risk, high-reward play in a market that's still in its infancy. For investors, the decision comes down to risk tolerance. Do you want the stability and profitability of a proven leader like ARM? Or are you willing to bet on the speculative, but potentially game-changing opportunities in quantum computing with D-Wave? Either way, both companies represent the cutting edge of technology, and their stories are just beginning. Conclusion: what's the move? ARM Holdings is a powerhouse in the AI and semiconductor world, with a proven business model and significant growth opportunities. But with its sky-high valuation and reliance on future demand, it's not a stock for the faint of heart. If you believe in the long-term potential of AI infrastructure, ARM could be a solid addition to your portfolio, but only if you're willing to ride out the volatility. For now, it might be worth waiting for a deeper pullback before jumping in. Thanks for watching. If you found this video helpful, don't forget to like, share, and subscribe to The Finance Savvy for more insights into the stock market's hottest trends. Got questions? Drop them in the comments below. We'd love to hear your thoughts. Stay tuned for our next video, where we'll dive even deeper into the AI revolution and its impact on tech stocks. Until then, happy investing.